So now, let me change. I'm putting my ear. Let me give me 2 minutes. I'm changing my earphones so I can hear you guys. Okay. 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 We are going to start now. Um, I don't know if you remember what I taught you last week. Okay. If you can hear me, please type zero in the chat. I'm going to start now. I hope everyone here is now ready for the call. I'm looking. Okay, I see Ashley type one. Hey, Juvenal. Hey, yeah, I have people coming in the room. I have more people coming in the room. Okay, so okay. Um, Yesterday we did not have the call because we had a meeting, educators meeting. That's why we did not do the call. But I want you guys to focus because what I'm teaching you uh, is making results. Okay, this is silver. You all know silver, right? Silver, it's XAGUSD. Gold is XAUUSD. Okay? These are not the same. Silver and gold. Sometimes they move the same way, but sometimes they're different. Okay? But most of the time on a higher time frame, they're correlated. So this is a trade that I placed on my own chart because I couldn't send this in the community. It happened 30 minutes, I think, before I sent the 30 minutes, 1 hour before we start this call. This trade started. Okay, but I really want you to focus here because it's going positive, and I don't think it will come back. And I'm talking to you guys, especially because I know some of you are looking forward to find a good strategy. Um, Especially Juvenal here, he texted me about a strategy, asking me about questions. I want you to really focus on this lesson because um, I'm gonna do the live market analysis and show you. I was expecting to take this trade with you guys, but it happened before. So I sent this, but this is another strategy. Let me show you why. Because here on H4, there's look at what we have here. We have high, low, then price break out of this, get low, and then retrace inside and then break again. Now we have a bearish range. Okay, this is a bearish range. And when you have a bearish range like this, whatever you do is just you need to find your zones. Your zones must be like premium and discount. You take the range high and the range low, you mark the middle of it. This is the equilibrium point. Everything that happens above here, you sell. Everything that happened down here, you buy. That's why if you bought here, you will be right, and you will take a trade like here. So me, I sell like this because I'm trying to catch the move that's going with the trend. Okay, the trend is bearish. Okay, guys, but that doesn't mean that I can be wrong. I can be wrong. Why? Because sometimes price can do like this and then shift structure from here, but after switching structure, it will always come back for retracement before it goes up. That's why my move in all the cases is a little bit secure. And let me show you now, when I go on the daily time frame, you can see how this was the beginning of bearish candles, series of bearish candles. So I know price, if we reach this zone, price will somehow find a way to retrace from here because we have sellers here. Another thing, if I go on a weekly time frame, I mark the key level. I have a video on my channel explaining to you how to mark the key level. And you have the key level here. This key level was a resistance and then got broken. And then it was a support. But after pushing that support, price did not break here. Price came and broke this. So now this is again a resistance. So as soon as price reached this level, I'm expecting to see price drop again. So on a weekly time frame, knowing that, I will go here, I mark it, and look at what price did when it arrived. Exactly at that level, price rejected. So now I went on H8. Okay, many people don't use H8, but I use it because it's for me, it's the best way to look at the day because like one candle, it's like one session for me. I'm drinking tea, sorry. So here, on this H8 supply zone, but we call it key zone. Okay, I don't want to confuse you guys with terms and names and abbreviations and terms and technical. It doesn't matter if you know the principle and the concept behind it, the meaning of it. You don't need a name. So here I have this high and I have this low. Okay. Okay. Juvenal, no, let me get Ashley. Ashley, are you okay? Can you hear me? Can you unmute your mic? I'm gonna set you as a co-host. So everyone coming in the room, you can just accept them and welcome them in the room, okay? Is it okay, Ashley?
Can you hear me?
Yeah, I can hear you. Are you okay
Oh,
with that?
yes, I'm fine.
Okay, I will. Okay, let me just.
How do I
Yeah,
do that?
you've been. No,
Okay,
you. I've added you as a co-host. So everyone
gotcha.
trying to get in the call, you will hear some a notification, and you just have to accept
Okay,
because there are people in the waiting room. As I'm speaking, I have to stop to go get them, and then sometimes it's disturbing. I will also I will also you I will also you add juvenile also. I will add you as a co-host. So if one of you misses but okay. Juvenal also and Ashley, you are co-host. So everyone coming in the call, you can welcome them. You can just let them in. Okay. Is it good? Okay. And Juve also. Do you hear me, Juve? Juve, j'ai ajouté les gens, j'étais mis co-host, comme ça tu peux rajouter les gens qui reviennent. Okay? Perfect. Now let's go. I was explaining to you guys how I catch my trades. This one is a proof of even last week I had many other trade with the same strategy, but I will show you this strategy again. I want you to know this strategy like the palm of your hands. I don't want you to even hesitate when you trade this, because this strategy works for real, and I will tell you why. But here I was telling you how I do it. So when I went on this trade here, when I saw this a big bearish move, I have a range. Why do I have a range? Because there's a high that broke a major low. Okay, this is a break of structure. If you remember when we saw market structure, this is a break of structure, and the break of structure means that we created a high and we created a low. Now, is the low stronger than the high? If you are bearish, the high will be always stronger than the low. Why? Because highs are breaking the lows. This high should break this low. So when you have something like this, and the zone is here, now you observe what I taught you, the fractal ECR. ECR was just an engulfment. In this case, we have a bullish candle and then a bearish one. It's a candle that's covered by another one, okay? And this candle, when you see it here, let me show you the green one. And this one is the dark one. Let me mark it like this. Has been covered, like here. Their bodies covered. And when you have this, simply mark this one as your ECR zone, okay? And when you mark this as an ECR zone, you know now you have a reaction zone because you're waiting for price to react in this zone, okay? And when I mark my ECR, I will go now on a lower time frame. Okay, I can go on H4 because I also have an engulfment on H4 here. So that's why I'm showing you the H8. It's a little bit bigger, but it's the same thing. But when I go on M30, when price reach my zone, I have an alert. That alert will ring and I will observe what price is doing, okay? And when price reach here, my goal is to mark the M30. M30 is here. And this M30, I will call it a sell setup. It's a setup because it's where I'm gonna play. I will see my price play out. Okay, this is where I will see my setup to work, and that's how I knew that price would come back here. Do you see that? Now inside of this M30, okay, because now in the M4 and MH, I was waiting to have an engulfed bullish candle, and I had an engulfed bullish candle. I mark it as my sell zone. Inside of this, I will go now on M5. When I drop on M5, I'm waiting to see an M5 engulfed like I saw on the M30. And remember, I told you this. Now you have two options. Option one is the candle that formed on the leg of the M30. Because if I come back here on M30, you see where the M30 formed. Let me show you here. Before we go out of here, like out of this zone, before we break here, there's a leg that formed that's engulfed candle, okay? In that range, I will go in M5 and see if I can find a valid ECR. And I gave you the criterias to find a valid ECR. First of all, it must break structure in the direction of the bias. We broke it here, the direction of the bias. Secondly, it does not have to have liquidity above it. And we saw here, we have liquidity, but what is more important is above us, we swept liquidity. So there are not many sellers here. Why? Because when market is looking for liquidity, it will come look for stop losses. Okay, if this is a sell and somebody else sold also here and somebody else sold here, now you have many sales stops here. But in this case, we had sell stop here before the sweep. So when the sweep occurred, we took out all these people that are selling, early sellers, and now we don't have any sellers left. That's why I say there's no more liquidity. So the condition is met. There's no liquidity above this M5. If price come back up here, maybe it's just to take us out because we are wrong and price need to continue higher. But if we are bearish, price will never come here, okay? And if it comes, it will never break here because this is the last stop loss. Remember this, when people took sells, when this broke out, they put their stop loss here. When this will do 1 hour, they will move their stop loss to break even. That's why price is here, taking them all out and making them hesitate to stay in their trades. Now, there are still some stop losses here. That's the max price can do, the maximum amount the price can do. And it will sweep here, create another reversal, and then from there go down. That's what I'm expecting to see. But I don't care. Why? Because my sell setup is bigger than all that. Okay? So when I mark my M5 here, I will call it option 1. This is the option 1 to enter a sell. So if I'm here, I will take a sell like this on my option 1. It's my first option of entry. I can put my stop loss here, or I can put my stop loss here. Why did I put it here? Because we know sometime price can come and get these people. So if our stop loss is at the same place with them, then we're going to lose together. It's not okay. We need to protect our trade and put our stop loss above the weekly key level. Remember the weekly key level? The red line that we saw here? The weekly, do you remember this weekly line? We put our stop loss above it because why? Price will never go back here. It's already rejected price. Look at the wick size. Price came here, touched it, and left. Do you see that? And when price will come back on M5, I don't think price will break the weekly key level. That's why my stop loss is here and I'm safe. Okay. Now let's go back on the chart. What I'm seeing now is I have an option 1, but you can come late. You can arrive late. Like, okay, I wanted to take the trade, but the trade has left already. Emile, what should I do? What should you do? You need to find your option 2. What is your option 2? Your option 2 is the M5 ECR. ECR means engulfing candle range. Is the second ECR that touched the first option. Do you have one here? I just want you to see it. Do you have an ECR? This was me showing you how you could take the first entry, option 1, protect here. This is almost the one we took, and I know why I took this. You see, this is our entry right now. It's option 1. Okay, so now after this, if you miss the trade, okay, this was marked already before the trade, but I'm just showing you. After this, I have an engulfed candle, and everybody can see it. It's here. This green candle has been engulfed. Now, if this is engulfed and it touches the first option, I also need to check the correlations with the criteria that we have. Okay, is it correct? First of all, yes, we swept liquidity on a lower time frame. Okay, I'm gonna remove the sell. You already know this because I want it to be clear and you guys can see. Okay, this is my reaction zone. Okay, you see this? The line here above this price action. Do you see how we swept? We took out all the sellers that put their stop losses here and use some buyers on a lower time frame. And now people are starting to buy and put their stop losses here. That's why you have equal lows here. You have equal lows here. This is equal low on M5. And this equal low must be taken out. What does that mean? Price will come down. Okay, see, you see here, we have an engulfment that touched the option one. Option one has been touched. Okay, we suppose that our trade is running now, but somebody else is late to this trade. What you should do is mark this option two. This is now option two. And this option two will be the one that you will take trade from. But you need to wait for something. You can wait for price to break here. But as soon as I know I have liquidity, I know price will be pulled down here, I can mark this as a trade. Now I will take a trade, put it here, protect above the same level. This is a trade of 15 pips. You can just 15.5 pips. And I can mark my option two. I put a sell stop. What does that mean? Sell stop is when price is above my entry. Okay. I don't want to sell on, I don't want to sell with too much higher price. I will expect to see price drop because I know it will reach here. I don't want to sell now. I will let price play out and then come on my side. Okay. So the sell stop will be placed here, and I will wait until price comes down here. My trade will not be triggered. So it can go and do whatever it wants here. As soon as it triggers here, we start the sell. Okay? This is the second option. Right now, we are inside of the first option, and we are in drawdown like this, expecting to see price drop. Okay? And we are waiting for it to do it. I have another trade here, but this is another strategy. I mastered 3 strategies, but the one I'm showing you is the most profitable. Okay? Because most of the time, this thing will play out. Most of the time. Because the H4 is already bearish. The trend is bearish. The M30 is bearish. Now the M5 is just the timing to get in. Okay? Now here, same thing. We did the same thing. I marked previous weekly high and previous weekly low. Previous weekly high was swept today and price returned inside. I went on the daily to see if my weak candle started here. What does that mean? We are going to go bearish. Why? Because I need to see a wick formed, then the body, and then the last wick. Okay? And all this is explained because I have a bearish wick before, and this is the wick we are in right now. So we are creating the wick, and then we can drop and go lower. That's what I'm expecting to see on Euro AUD. So Euro AUD on the daily time frame, I can see here our price is pushing up. We took out previous daily high, and we hit the previous weekly high. We returned inside, and I took a very aggressive entry here. Let me show you. Same thing. On H4, I can pull here. Now, this is another strategy that I'm showing you, but it's almost the same principle. On H4, what do I have? I have the breakout structure. Okay? You can see the breakout structure here. After the breakout structure, I know my highest point is up here, and my lowest point is down here. What are those? The weekly, previous weekly low, and previous weekly high. So I know I'm in a weekly range, but we came inside of the H4, we swept the previous weekly high, and then we created this H4 bearish candle. So I know we are bearish. That is most likely scenario that can happen here. So when I go on H1, okay, I did not mark again another engulf candle, but on M30, you would do the same exact thing that I just showed you. You take this here, that's why I call this an aggressive trade. You take this as your M30, and you expect price to come back first before you sell. But I sold already. And that's why I said you must be careful with your risk because this trade could hit stop loss easily. Why? Because we have a M30 here waiting for a confirmation. But the why did I take the trade? Let me show you now and explain to you why. Because this strategy also gives you some pros, but there's also cons. But when you come here on H4 and you arrive here on H4, the main thing you have to do, you go straight to M15. What do you do on M15? You mark the change in direction. The change in direction is the last point. Let me show you here. Is the last point bullish candle, bullish move before the sweep of liquidity. When we break it, then we have a change in direction. It means like price has turned around. Okay. And if my change in direction don't hold, I will go back to my M30 and I'll go back to my strategy. You see how you should react to the market? You are not just reacting, you are using what you know. And that's why I'm teaching you this strategy first, because this will protect you. You have option 1 and option 2. This is just a sell setup. I know even if I lose here inside, if it gives me another M30 engulf candle, I will go inside and look for M5. And that M5 will be my entry point to sell. Okay? So here I'm observing. I don't know if anyone is in this trade right now, but it's the more risky, Euro AUD. Okay? So we have Euro AUD, Euro GBP, and I also was showing you this. Okay? This is silver. Please pay attention. Let's go again. This one was one of the best trade I took today, but I couldn't send it in the community. So let me show you here on H4 first. Sorry, I'm drinking some water now. You have here, okay? This is today. Let me remove everything. First of all, you should go on the daily time frame. What do you do on a daily? You need to mark, please write the steps. These are the exact steps that I take. Daily, you mark the highest point and the lowest point of the previous day. Okay? The highest point here and the lowest point here. Now you ask yourself, that candle, how does it close according to the previous one? Then you mark the high or the low of the previous candle to the prior one, the one before yesterday, because this is yesterday, Monday, right? This is Friday candle. How did we close on Monday? We close in a breakout. There's only two ways to close: in breakout and in fake out. If you keep that in your mind, whatever you're doing the analysis, most of the time you'll be right. Did we close in breakout or in fake out? We close in breakout. What does that mean? It means the intention to continue higher is stronger. Okay? So we know now we're expecting to see the today's candle open, create a lowest point, and then go up. It means what? We are bullish. Our intention is bullish. This was the daily. Now you drop on H4. What are you looking on H4? Whatever engulfing candle that you see is it should drag your interest. Here I have one, and it's an H4 buy. It's an engulfing H4 buy. I also have another one here. You wouldn't know where price will arrive, but you have to mark your levels. You have 1, 2, H4 engulfing candle. And if you have one that is in the other direction, you know how we called it, right? We called it broken ECR. It was a broken ECR. It was a bearish one. It already gave trade here before. Now, after selling and hitting here, price came back and took it out. It's a broken ECR. A broken ECR is also valid to be considered. You couldn't even consider this one if you didn't want, because some brokers will print candles a little bit weird, but this is the same, is as important as this one. Because why? It gives you the idea of going higher, bullish. Okay, so if you mark your H4, now we know here we have an H4 buy. What do? You go on M30. M30, looking for the first idea on the leg that formed the engulfed candle. Do we have an M30 engulfing? I don't see one. I can see one here, but this is already going out, so I'm not going to take that in consideration. I can take it in consideration, but I will have to watch at what time price returns here. You can see here it returns in Asia, and I don't want to take that trade. So what I do, I wake up, I see here my trade. It's this is 10 p.m. USA. My alerts will ring, and then I will mark this as my engulfment. Why? Because it's the last bearish move that got engulfed by the bullish move before we break out of this range. We broke out once, we went inside. After coming back, when did we break out again? Here. We broke out here. We came back, but we already broke out. So this is my H4. Now listen. First of all, you could have found a trade here. And let me show you how. When price came back, that's why I love this strategy. You don't need to be there staring at the chart. You can find an entry whenever the price comes back to your zone. Now, here you have the price coming back. This, it's an M30 buy. I need to call it, it's a buy setup. This is a buy setup. I need you to see it. Don't confuse the H4. The H4 is for this range here. So when price came back and got out, we had a buy. All this did not happen yet. Price touched my M30 and start to go. But before that, I would put an alert here for sure. Because why? I'm waiting for price to reach my level. When the alert rings, I will go on M5. What do I see here on M5? I'm looking for the last engulf candle before we break out of the M30. Where is the M30? It's here to here, right? When did we break out? Here. Where's the engulf candle? Can you see the engulfed candle? I can see it. It's very small before we break it. Do you see how price respected? This was a trade you could have taken around 130. So this is a London session trade, okay? But let's focus on New York now. Because after this, price gave you an M5 entry, boom, you went straight up, okay? And before we see price return here, we could also continue taking trades, okay? We could have taken another trade here as option 2 and protect below what? Our setup. Our setup is here. But I don't like this type of trade because sometimes the stop loss is too big. I will just wait for price to come back, okay? Now look at this. We have price giving us option 1 here. Let's call this, let me call this option 1. You have option 1 here, and you have option 2. So option 2 is too big. Sometimes you have the choice not to enter, okay? You can just leave it there because sometimes price is not coming back, but sometimes it will. Many times it will touch this and then continue. So your option 2 is valid. The only problem is took too much time to come to your option 2. You should close this trade if you were waiting and expecting price to come, because when price will come, this is now liquidity. Okay, many people entered buy here and they put their stop losses here. You cannot take the option 2 and expect price not to sweep it. Price swept it here around 10:30, And that's when today I came on the market. I was looking now, what do I see here? Still on M5, finding the engulfed candle, the last bearish move before an explosive. It's here. We have now, okay, you see here, we reacted from the leg, option 1, option 2. Now we waited for price to come back inside our M30. And after touching our M30, now we have another option 1, okay? This is the trade that you were seeing when I opened the call. Now let me show you. M5 will give you an entry and then you can push. But if you missed this, what would you do? Okay? If you missed this, you have another engulfing here. You had another engulfing here. After going out, price came and created another engulfing. Now you have option 2 here. Okay? But imagine price touched your level, you put your stop loss below here or below the setup. It depends on how aggressive you are. And you target the next M30 above liquidity where price could stop. It's here, right? This is where you expect price to return. If you go on M5, you can see there's one you can refine here. Is this engulf candle? And this should be your target. And this is the trade, 2-hour trade, okay? Inside of this one, you could have done more. Why? I'm gonna show you a variation. We use the daily, the H4, and the M30 to find our game plan, okay? And from this M30, we took the M5 for our entry. But our 2 options are on M5. But let me tell you this. You can also use the H4. You divide it by 4, H1, to give you a setup instead of using the M30. Now you go deeper. You go on M5, on M15 to give you the it's like H1 is playing the role of M30 with M15 to give you more details. And now on M1, you can take your options, okay? H4, H1, M15, and M1. Sometimes H4 and M15, M1, okay? I put the H1 here for you to have more details about your entry. And I'm gonna show you that on gold. I'm gonna show you that on gold. This is the trade you could have taken on silver today using the simple strategy I showed you by yourself. Because you should be able to mark H4, wait for the M30 to come, and when the M30 arrives, you wait for the M5, and from the M5, you take your entry, you protect below here, and you target another zone above. You can target the 3-hour trade like this, right above this liquidity, but you know exactly where you should be careful. If price rejects here, don't be surprised. Why? Because you have an engulfing M5 above of liquidity after a sweep. So this could be a sell opportunity later. So you need to be careful before you see price break through here, okay? So when price reach this level, you just take your partials or you close or you take your trade and put to break even, okay? That's how you manage your trade. This is what's happening now. This is live market. This is silver playing out now, okay? Here, I'm expecting to see price drop, but it's still going back. This one will hit stop loss, the first one, the Euro AUD, because of the session time. I have another trade here. I think that's the one that will play out, but this was an aggressive one. It's okay. I need to send you and explain to you why I take in every trade that I take, if I have the opportunity to explain it to you. So you know, and you also be careful. When you see a trade, you could know how to manage, okay? This one, I still trust it. I know price will reach here and then return. because of the weekly zone that is very strong. This one I trust it, but I know that price has to give us the second sell zone. This is the sell zone. We know how price is playing out. Let me mark this like this. This is a sell zone. We are inside of a sell zone. Price touching our stop loss here, but wait for the sell to give us an M30 engulfed candle inside here. And then from there, I can sell later. Okay, so I'm waiting for that to play out and then I can sell. But here on silver, I was telling you, I will show you another option, how to refine and take entries, many entries in one day. Because this one, sometime will give you only swing trades. For the time to wait, and wait can be like, okay, from Monday to Tuesday, then you have a trade today, or it can start on Wednesday and then finish on Friday, and then you start a trade at the end of the week. But look at this now on gold. On gold, let's go on the daily. What the daily did, it was bullish. We know what gold is doing. And here on H8, I have an engulfing candle here. But you can see how gold is going straight up, okay? And you don't want to know when price will come back here. Maybe it won't come back. That's when you need to refine. On H4, you still have an engulfing, and then on H1, you have one. You see that? On H1, you have an engulfing candle. Now you have this. It's been engulfed here. This candle is where you can enter. You wait for price to come and retest. You put an alert here. When price come and test it from H1, what did I say? You go now to M15. Now, when you go to M15, you are expecting to see another engulfing candle. After the engulfing candle is formed, now you put your alert here. Okay, price did what? It went out, then came back. Boom, your alerts start ringing, and now you drop on M5. After dropping on M5, you have the option, and that's what I told you. You can do H4, H1, M15, and H1 and M1 like this. Let me write it down again. H4, M15, or H1, and then M1 for your entry. Okay? H4, M15. You see? Let me write down. Okay? H1 or M15. These two will give you, okay, according to how you see the candle. Some people are used to look at the candle in detail. Some other don't want too much noise. That's why you have these two options, but you can use them together. But from H4, you should mark your H1, and that's the one that we marked here. That's one. It's the H1. Then we dropped on M15 from H1 to mark the next touch. The next touch is on M15, and from M15 we go to M1 now. Okay, H1 to M15 to M1. Before it was daily, H4, M13, and then we entered on M5. You see the difference? Now, let me go back very quick. You have your zone on M15, and you mark when price arrive here, it will ring with this green candle. When it's ring, you can come now here on M5 and see liquidity. Here is not to take entry. Look at liquidity. What did we take out? What did we do? Why do I say that? Because looking liquidity on M5 is easier. Okay, you just look at liquidity. I see how we swept this before we ring our M30 zone. This is our M30. Let me mark it and text and write M30 so you can see. M15. Sorry, it's not M30, M15. Okay, this one is H1. Okay, guys? If you have any question, please don't hesitate to write it in the chat. So you have H1, you have M15. Inside of this M15, what do I have on M5? I have a level here, okay? But M5 is not for me to take any level. I just want to study liquidity. Even if I can see an engulfing here that could have given me a trade, or this one also that could have given me a trade, my goal is to see what liquidity here. We have this. Breakout traders put their stop losses here. Now I have liquidity up here, okay? So if I mark this like this and say liquidity here, I have liquidity here. People who sold here or took their trade from here and bought here, this is where they put their stop losses. So I have this swing high also having liquidity. Now, everything that you see here did not happen yet. That's why I'm telling you the green candle came, did this, and then after the sweep, boom, we have now the ring of our alerts. Okay, you drop on M1. On M1, what do you want to see? Two things. Option one, remember, inside of the M15, on the leg, what is the last bearish candle before the explosive move that break out of M15 zone? It's here. You can see it here. This is where you should enter, option one. Okay, option one. You see this? This is option one. Then option two should be M1 engulfing candle after retesting the option one. That will be option two. Okay, so option two is here. Now you have option two. This is the second entry. If you are late, this is the one you can use. Now, look at this. I marked this in yellow. Why? Because some people, we still have the reflex to mark the M5. You see here after this, you have the M5 that formed after touching this M5 again also. So you still have option one and option two on M5, but the price is just too big for you to take the stop loss will be big, because if you push below this guy, it will be very big. So here on gold, what you had was an entry here, stop loss below M15, which is now our sell. Okay, our sell set above our setup, sorry, not sell, our buy setup. And from this buy setup, I took my M15 refined zone, which is M1 inside the last bearish move before we break out of M15. Entry was when price came and retested here. As soon as it touched it here, I started buying. And here, if you came late, price return and give you another M1 engulfing, you can now enter here and protect below. You will see how much pips you will sacrifice according to, but you have a lot. You have, first of all, the option two lowest point, the swing low here, or the option one as where you can put your stop. That's where I would suggest you to put it, because it's almost the same amount. And then I will target liquidity up here and this one up here. Knowing that it's gold and gold should continue higher, I will target higher, like 5R trade or maybe 4 for this one, and expect price to play out and leave it without touching nothing. Okay, and when you see on M, this is M1 trade, you see now you can take M1 trade with this strategy as well and see by yourself how it played out today. It came back, it gave the entry for option two, and it went up. Okay, you see that? This is how you use that strategy. And this is now, right now, I think price would stop there. We are bullish. Is there any question, guys? This is how I find my trade ideas. Very, very easy. The first thing you should do is go on daily and weekly time frame to find the direction of a bigger candle. It's a weekly candle or a daily candle. If you know the direction and you are almost sure that a candle will be bullish or bearish, you have a direction. Now you need to go on H4 and find your reaction zone. Here it's H1, but you can be H4. H4, when price goes out of it, you go on M30, price will come back and touch it. You wait for that M30 to form an engulfing candle. Going out of that zone after the retest, you will have another zone that you call your setup. That's your setup. And then price will give you options from that setup. The first option will be on the leg of the setup, or the second will be formed on the retest of the setup. And you have the option 2 here. And you can enter from there and you can see a trade play out. This strategy is not very known by many people, but this strategy is very profitable. Guys, this is a strategy that I use myself. What happened on Euro AUD? You see, price almost took us out, and now it's returning lower. Okay, okay, I can see it. These are the trade that I sent earlier. So now let's play this out. Look, you see this one was M30. This is one, the M30. Price came here, created a move, and gave us another M30. Let me mark it so you can see. Where's the M30? You see? Here, we have a sell. Now, inside of this M30, as soon as I will see maybe this guy here getting engulfed, I will be very confident about my trade. You understand? And this, on a lower time frame, it will be a shush, a change of character. Okay, so that's why I teach the engulf, the ECR, the engulfing candle range, because I know it will give you good reflexes on many other strategies, because you will care about the price action, you will care about the candles, you will care about the timings, and it will give you patience. Patience will teach you how to wait for the zone to be hit before you look for the next step. H4, when it's touched, M30, price goes out. When it's touched again, M5. Inside the M5, option 1 or option 2. You take your entry there and you target the next M30 here. You see the next M30 opposed to my move. This is my target, because I know price, if it reaches here, now we will have a bullish scenario. Breakout after a sweep going like this. This could be a zone to observe. Why? Look at the H4. Inside of this H4, now we have an M30. Okay, this now is a H4 buy. Let's see the M30. Inside of this guy here, we already have an M30, which is a buy setup. Remember, this is a setup. Now, buy setup was touched and price pushed here. Inside of this setup, what did we have? We have two things. First of all, this big candle was a sweeping candle. It swept liquidity down here, down, and then I go on M5. What do I see? I have a change in direction. This change in direction push price up. We have the M5 engulfing candle before breaking out of the buy that has never been retested. Okay, but the option one, so the option two, sorry, the option one is here on the leg, but it has never been retested. Now I can see on M30 above here, before we break this level, the last M30 that was created was this one. So this is my target because I know if price drop here, this is where we'll stop. Okay, I'm explaining to you with a live trade why the live analysis is more is less predictable, and when price will play out, you will have that in mind. You are expecting it, so when it works, you will get it and you understand it on a deeper level. Okay, so H4, we expect price to come here, and that's what I'm waiting for. Okay, but before, like yesterday, if we wanted to take a trade, this was the entry. You see that every day it could give you an entry. This was the entry yesterday, because after this, when price swept liquidity and broke up, this was a buy entry. Okay, you could have bought here. Like I told you last time, some people will buy on the M30, protect above the last swing, and then target the next M30. It's here, up here. You see? And then all this will be just one trade yesterday. So today, I'm taking the sell. Today, I'm taking the sell. I'm expecting to see price drop, and I hope that's what will happen. But let's keep observing price, and we will see what price we do. So if there's any question, please don't hesitate to ask. But I think we have done for today. What we are expecting for this week, it will be just zones like that. And I hope you all got something from this call. Thank you, Ibrahim, for being the last one. I will now stop the call, and I think this video will be posted on YouTube. Okay?
Okay. Thank you.
Thank you. Did you understand the strategy?
I'm getting it slowly.
Yeah,
Thinking.
it's very, you have an H4, okay? Like this, price created a bearish intention. You know that price is going lower. So you expect price to come back inside your zone. When it reaches your zone, now what is more interesting for you is to find an M30. Once you find an M30 inside of that H4, you have something. You have a setup confirming that price is going lower on H4 and going lower on M30. Now, what you expect to see next is price returning inside of that guy. And now from there, you have two options. First option, from the leg itself, you will look for an M5 as option one and take an entry from there. And then you enter here. Boom. And if you are late, like you missed this trade, you still have another option. Option two is when price comes back to retest the option one, if it creates another engulfing on M5, now you have option two. And option two, most of the time, is the real move. But then price will come and give you this and drop from option two. You can take it here or here. But anyways, you target the M30, the next M30 down here. When you do that, you have the strategy. That's all. H4, M30, M5, M5. Two options. It could be H1, M15, M1, M1. Okay? It could be weekly, H4, H1, H1. You see the top-down analysis. Yeah. That's how you use it. So thank you, Ibrahim, and
Thank you, Emile.
let's meet next week. But this time, I think I will do Sunday,
Oh,
Monday,
okay.
and Tuesday. Yeah, next week.
Okay.
Okay.
Great. Thank you.
See you,
Bye.
man, and take care of yourself.
You too. Thank you. Bye.
Okay.